And now it's time for Talking Trade with Sandi Siegel and Ken Wasylik, sponsored by the Dairy Farmers of Wisconsin, Carroll University, and Michael Best Strategies.
That's enough in the door. Let's just talk about, we talked about the 166 billion that is up for refund. Okay, some of your companies, some of your customers are filing for refunds. Do they expect to really get that refund?
Yes, absolutely.
And what will it mean to that company? I heard an economist speaking on the radio the other day that this would be it could be a net benefit for the economy because it would be like a dividend. Companies would be getting a dividend that they hadn't maybe expected, and so therefore that could lead to further investment, not necessarily flow to the consumer, but could help as an economic stimulant.
Well, yes, and I'm curious, if nothing else, on how will we see the impact of those refunds, right? When all these duties were implemented, and we were in conversations with our customers, helping them navigate it, and I was always interested in: are you passing it on? Are you just tightening up your margins? What are you doing in managing to absorb or deal with these additional tariffs? And it was very mixed, and it depended a little bit on their customer and the arrangement, and is it retail, meaning that got a large breadth of customers, or was it more direct? And for example, one of my large customers, their customer is Nestle, and they were importing product from Brazil that overnight had an additional 50% duty slapped on. That just was devastating, needless to say, and certainly something that would have been very difficult to absorb. And they sat down and had negotiations with Nestle, and they kind of shared the additional burden of that 50% increase. I haven't asked. I would imagine that now that they're going to get refund, that they're going to share in that reward as well. But for retail customers or others, it was mixed. Some said we're going to wait to see. We're going to definitely decrease our margins, decrease our profitability. Some passed on some, not all. Many went back to their suppliers overseas and renegotiated lower pricing, whether it was China or Europe or what have you. So it will be interesting to see, now what? Are they giving it back to overseas? Is it sort of like the PPP loans where just this right infusion of cash that goes right to the bottom line? I'm pretty sure when I go to Target, they're not giving me back everything that I paid last year on all the increases. So it's interesting to think about what's that going to mean for the economy as that money starts coming back with interest, by the way. So
how has the process been so far? I mean, have you?
We have done it, and we have started filing it. Opened on Monday. It's a portal. Customs was mandated by the Court of International Trade. Or the government was mandated, and then Customs had to implement the refunds, and they asked give us, forgot how many days they needed to get the programming in place. So this is phase one. It opened on Monday. There was a little bit of, I won't say the system crashed, but a little bit of challenges in the portal opening up, because obviously it was just deluged with refund filing. It's amazingly simple up front on what they're asking for. It's literally just a list of all the entries that you filed, and they're recalculating everything, and they're committing to issuing the refunds within 60 to 90 days, again with interest, which is a pretty quick turnaround. So not quite all entries, the more complicated entries will be in later phases, so there's some limitations, but it's the lion's share of entries that were filed in that time frame with the duties paid, the ID duties that were publicly legal. So yeah.
Okay, we have a very intelligent audience here. I know that They have some questions. I hope they have some questions. If you have a question, raise your hand. Go ahead, shout out.
Awesome.
So when you guys are talking about the idea that China has become so much more involved economically with a lot of countries that haven't previously, well, they certainly are continuing to be sort of an adversary for ours economically. Is this normalizing their interaction with other countries and potentially even westernizing them when it comes to interacting with countries in Europe or with Canada?
Are you suggesting that's a good thing?
Not necessarily, just in general.
Okay, go ahead.
So I'm not sure about the question to normalizing, but they cannot be ignored. So we've talked about the Road and Belt Initiative, by which they've carved out both the maritime and the land-based routes, shipping routes, and they intend to be paid in their when. That's huge, because now commerce is going to move with that currency in the future. There's a lot of theorists are thinking there's going to be two dominant currencies, the dollar and the yuan. Also, if the dollar loses its power, if it devalues, our lifestyle will be impacted. So China's to be reckoned with. You know, there's a projection that their GDP is going to catch up to the U.S. Within 10, 15 years. Some say sooner. So normalize in the sense that they'll continue to be a player in the world and need regard. Yes, absolutely, it's just going to increase, I think.
Yeah, I would say, just to add to that, if we're talking specifically about China, it's like any business. If you lose a big customer, you're going to find other customers, right? You just shift, right? That's what we learned in business school, right? You find the new channels of customers, and that's what the Chinese are doing. So the Chinese basically manage their currency, and so it's estimated that the yuan is about 25% overvalued, or undervalued, I should say, which means that the Chinese government depresses the value, okay, so that the exports are cheaper. And so we were seeing that, you know, their trade deficit, or their trade amount with Europe, the EU specifically, has increased since the offset the U.S. side. So, you know, normalizing, I don't know, it basically rebalancing. Is that a good thing? Well, it's a good thing if you're China,
Those countries,
right? It's a good thing, because one thing we also teach in business school is diversification. Don't put all your eggs in one one basket, right? Make sure you have multiple suppliers, you have multiple customers. And so this is that a bad thing for the U.S.? Well, it loses your negotiating power.
Well, and I think it's not only that China is looking for other partners in reaction to things we've done, so are some of our other key NATO allies who are now, you know, not as pleased, you know, based on how we've treated them. So they're also softening on talking to China, obviously. So,
Right.
you know.
I would also add to that, one of the industries that we haven't really touched on, but that the United States has long been a substantial arms merchant globally, and because of some of the declines in the munitions that we're using in Iran, as well as sort of shifting alliances and concern with regard to the cost and supply that the United States may be able to manage, that our role in that regard has potentially also contracted. And that's to potentially China's advantage, as well as other countries that are able to produce large-scale military capacity.
That's a really good point. Actually, the number one growing industry in Europe right now is defense.
Yep.
And Germany is a big part of it.
Yep.
And Germany is a big part of it, which, you know, if you think about the last two world wars, their neighbors never wanted Germany to be a strong military power. Now they're like, hey, let's all
Charge up again.
Yep.
you know,
Yeah.
and the Finns and the Swedes and the Poles and the Estonians, you know,
Yeah.
they're all boosting their defenses, their security, the military fundamentally.
It's all mixed up. Okay, other questions out there? Yes, go ahead.
Hi everyone. So I'm Ivy, and I'm currently an MBA student at Carroll.
Yeah.
As someone at my early career, I'm curious, what was one decision that you make that helps your company stay resilient during the trade disruptions?
I'm sorry.
Just to
I
repeat
can't-
that, Momo, could you repeat that, the last part?
Yeah. What was one decisions that you make that helps your companies
Oh,
stay resilient during the trade disruptions?
What?
What was a decision we made that
That
helped
helps
during
your
the,
company stay resilient.
that helped make decisions in this disruption? Yeah, go
Go
ahead.
ahead.
Well, I was gonna say, Alexandra said it earlier, the uncertainty, which is what has been the most challenging part as a consumer, as a business, as, and I think, and, whether you're buying raw materials or, finished goods, it's being able to forecast or set pricing has been what's so difficult, right? And even exporters, what's the market going to be? And, is my good, is the tariff going to change at the destination country? So it gets back to what has been the case for quite a while in international trade is diversifying your supply chain. And even that didn't help a lot of people because if people shifted from China and moved to Vietnam, and then overnight Vietnam got 45% duty rate, on Liberation Day. So the more resilient you can make your supply chain and have plan B and C, and it's really been difficult, and sadly seeing a couple businesses that couldn't write it out, that it literally put them out of business.
well, the bigger the company, the easier it is to spread your risk, right? The small and medium-sized companies that have a very small margin,
Right.
it's more difficult, right? You just get out of COVID and all the supply chains have broken and reformed, and then here come another series of events like this. I can see why some companies would be on the brink. Anyway, Ken, to answer the question.
Yeah, okay, so, a year ago when, my job is to advise our clients, and everybody starts talking about long-term planning, right? You probably learned this in class. Long-term planning, 3+ years. Then when it got down to 1 year or less, it actually got down to what do we do in the next 30 days? Okay, and that was long-term planning because it was so much uncertainty. Businesses love certainty. They might not like the rules, but if you keep the rules the same, I can gravitate and the water will find it's the path, right? But if you keep changing the rules, I really don't know what to do. So it's basically trying to come up with multiple scenarios, A, B, and C, and actually have action plans depending on what happens. So you do a little bit what we would call gameplay. What if this? What if this? How are we going to react to that? Bigger companies have the staff, have the tools, the AI tools to actually do this a little bit much better than if you're a company of 50 people and you got 2 people in purchasing, right? You cannot adaptate, and that's fundamentally what has happened is that big businesses have navigated this as better than smaller businesses, and smaller businesses are going out of business, okay? We talked about agriculture. Really big hit here in Wisconsin. Our soybeans are down 50%, our exports. That's a big thing. Yes, the administration came up with a so-called bailout plan, but it's nowhere near the loss of revenue to these farmers. It would basically, got food on the table, but it was nowhere near the loss of revenue. So to answer how we handle this is that we try to be as much flexible as we can, monitor and diversify as much as possible, which was really hard because everybody was doing the same thing, right? Everybody's looking for a second, third supplier. Well, they're all going to the same sources, right? To the same sources. Again, bigger companies that have a lot of volume, can really plan and say, I'm gonna buy 50,000 pieces, boom, they get the attention, whereas a smaller manufacturer that says I need 1,000 pieces really didn't get the attention from these second suppliers.
Okay, so our time is short. I just have kind of a wrap-up question. Maybe look at the crystal ball a little bit. Knowing what you know and about temporary tariffs and, I don't know, maybe a little beyond 30 days. Let's look at that. Let's try to look toward the end of the year. Positive or negative outlook do you see for the economy and the tariff landscape? Let's just start with Alexandra.
It depends on the war and normalization of relations.
Okay.
Yeah, I would say the same thing because the energy costs and the energy shocks and that combined with the tariffs, I don't know what's going to happen.
I would say more of the same when it comes down to tariffs. Obviously, we talked about the ones that have been declared unconstitutional, but there's plenty of other avenues that the Trump administration can actually use. I would say it's more of the same. I would also say that businesses, because of all the uncertainty and ups and downs and craziness of 2025, they're adjusting to this type of attitude, right? Their models, their forecasting models have been adjusted. Still doesn't, nobody likes it, but the models have been, your mindset is saying, okay, I'm just looking at 30, 60 days, and I'm overbuying, actually. So when the tariffs are temporary, over 20%, I'm buying as much as I can, bringing it in, so that the next time it spikes, then I tell my supplier, hold off and don't ship.
Okay, Sandi.
I'm going to be more optimistic because having watched this unfold and, from the beginning, just understanding the trade law, I'm like, okay, how is this happening? And some of this, can't be the president's decision alone. And, I think whether, and though I don't see us talking about it a lot, it certainly isn't, it didn't favor well for President Trump, and and now it's costing us because we have to pay interest on all that duty that was collected. He's looking for ways to implement tariffs as he has been, but certainly there was a lesson learned, and as I had hoped all along that the voice of reason and our checks and balances in our government will stop what is unfair trade. And so we did stop the IEPA, and that would had that not gone through, I may have had to have resigned at that point. So our checks and balances are came through at the end, and now again it was detrimental to the country, and with interest in some of the relationships and all the concerns, and his approval rate is going down. So I'm going to be a little bit optimistic. Yes, I think there will be other duties. Some of them will go through, and they probably should, by the way. Just like, the initial China 301 duties are still in place because there are some unfair trade practices in China and intellectual property, things like that. And again, they should, and, those negotiations should happen, but hopefully there'll be a more level playing field. That's my hope, I guess, and partly my prediction.
Next year, April 2027, we'll see.
Okay, we'll see how. So I think it will be at least better than the last 12 months.
Mm-hmm. Well, the stock market, which is supposedly a forward-looking market, agrees with you. So the stock market remains optimistic. Okay, that brings us to a close. Really want to thank everybody for tuning in and being here for this edition of Talking Trade on the tariff landscape. I want to thank Alexandra Sielaff, Lilly Goren, Ken Wasylik, and Sandi Siegel, and all of you, as well as our sponsors, Carroll University, Center for East Asian Studies at UW-Madison, Dairy Farmers of Wisconsin, and Michael Best Strategies. So we'll see you next time.
You've been listening to Talking Trade with Sandi Siegel and Ken Wasylik. sponsored by the Dairy Farmers of Wisconsin, Carroll University, and Michael Best Strategy.